Hi viewers, today we're going to discuss being underinsured, but before I move on to that topic, I want to address something that I left out of my last video. So in the last video, I discussed the different payment modes for policies as well as different types of policies, but I forgot to mention the term policy with the conversion option, and I like to call this policy the best of both worlds because it offers you a term product that gives you the option to convert that product into a whole life policy. And the way it works is that, let's just say you have a 30-year term policy. At the end of that policy term, you have the option to either have all the premiums that you paid into the policy returned back to you, or you can convert that policy to a whole life policy. And the way I look at it is, with that type of policy, you really have nothing to lose. And of course this policy wouldn't work for everyone. No policy is a one size fit all thing. But if this particular policy works for you, you really have nothing to lose, because if you outlive the term, you can have all of the payments that you made returned, or you can have the option of converting it to whole life coverage. Now, in the event that you convert it to whole life coverage, your coverage amount would be slightly decreased. Now, I'm just going to throw some numbers out there. This isn't the exact math, but if you have let's just say, for instance, you have a $50,000 policy and you choose to convert it to whole life coverage, that coverage amount may be decreased to $35,000, but you'll never have to pay another premium, and you'll have coverage for life. Now, every company does not work their product that way. I know quite a few companies who have that product with the conversion option, and they'll give you the option of having all the payments returned back to you. There are some companies that it doesn't quite work that way, but if you can find a company with that product, it's one that I'm kind of fond of, because like I said, it's really, the way it's structured is really nothing to lose if you outlive the term. Now, with some of them, you have a specific conversion policy. Yes, it's a 30-year term, but some of them want you to convert it before the age of 62, with others like before the age of 65, or whatever age that they put on it. So it's like whichever one comes first, either 30 years or age 65, you need to decide if you want to convert it or not. So I just wanted to cover that really quickly. And again, I'll answer any questions you may have about that particular product. And I want to move into being underinsured. So I had someone ask me, is it really a such thing as being underinsured? And what I'll say is, from an agent standpoint, and from the insurance world standpoint, yes, there is. There is a such thing as not having enough coverage. Now, I'm just going to speak realistically right now. Well, before I go into speaking realistically, so the rule of thumb is, you technically should have enough coverage that this is the minimum. This is the minimum. The rule of thumb for the minimum amount of coverage that you should have, that in the event of your passing, if you have children, a spouse, a home, a mortgage, people who are dependent on your income, the rule of thumb is the very minimum amount of coverage you should have is enough to replace a year's worth of your income, especially if you're the breadwinner. If you have people depending on your income, you should have at least enough coverage to handle a year's worth of expenses for your family. That way, if they have to move out of the home, or they have enough time to figure out what they're going to do, and enough time to get back on their feet or get themselves established, so that they can be able to live comfortably without your income. But it gives them enough time to make some decisions, maybe to see if they're going to sell the home or rent it out, or what they're going to do. So that's the rule of thumb. You should have at minimum enough to cover a year's worth of expenses for your family. However, like I always say, every situation does not work for everyone, and the goal is not that you get the goal is that you get life insurance, but also that you're able to keep your life insurance, because death can occur at any time for any reason. And I don't want anyone to feel pressured or stressed into feeling like they have to have these high coverage amounts, because you have to, one, get what you can afford. And I wholeheartedly believe in some coverage is better than no coverage. So let's just do some simple math here, right? If you allow yourself to feel bad about the fact that you may not be able to afford to leave a whole lot of money for your family in the event of your passing, so you just get no coverage at all, or you allow people to make you feel bad because the amount of coverage that you have is only enough to bury you. Let's just do some math here. So let's just say you had no coverage and you passed away, and you have a family who does not have a lot of savings, or who may not have any savings at all. Their salary is just enough, or they have enough money to pay the bills, put food on the table, take care of everyday needs. They may not have savings or money put to the side to bury you in the event that you pass away, right? And you have no insurance coverage at all. That's taking away, and you pass away, you have no coverage. So now your family has to take away from bill money or food money, or take out a loan or borrow money, or put the cost of your burial on a credit card, which is causing more debt to bury you, right? Or, what we see a lot, GoFundMe. But if you have that policy that's just enough to bury you, that's one less thing that your family has to worry about. So no, you may not have enough money, enough coverage to leave lots of money for your family. But think about it this way. If you have enough coverage just to bury you, that's one debt your family does not have to worry about. I have a client, and you hear me talk a lot about my young clients. I love all my clients, but it's something special in my heart for my young clients. And I have a client, and she knows that I'm sharing this. I got permission. She's in her early 20s. She has 2 children, toddler age children. One is actually a newborn, and the other's a toddler. And she was really excited. She got a $25,000 policy for herself, and she added her 2 children on as a rider, and they had $10,000 in coverage apiece on the 2 children. And she was really excited because this was her first time doing something like this. She recently purchased a car, got her an apartment for her and her children, and she was really feeling really good about herself, as she should. And she mentioned to her a relative of hers, about her coverage, and she told him that she had $25,000 in coverage, and it was $10,000 on each of the children. And this relative told her, well, that's not enough. That's just barely over the amount that it would cost to bury you. It's not going to really be anything left for your children in an event that something happens to you. So she called me back and she was feeling kind of down, and she said, I want to make sure, these are her words, I want to make sure my children are straight if something happens to me. So maybe I should do you think I should look into upping my coverage? Should I get, more coverage? And I told her just what I'm saying on this video today. Do what works for you right now. Get what you can afford, because in the event that you up the policy and you have to pay more, you may be putting yourself in a financial hardship. And no one should stress. It shouldn't be something that you stress over, and you shouldn't put yourself in a financial hardship because people are telling you that you should have a certain amount of coverage. Some coverage is better than no coverage at all. And even if, there are some policies that allow you to purchase coverage in the amount, starting in the amount of $1,000. You have some policies where you can purchase them in $1,000 increments, 1,000, 2,000, 4,000, 5,000, right? Let's just say all you can afford is a $5,000. And I'm not encouraging people to get $5,000 policies. I'm not encouraging people to get the lowest policy that they can possibly get. What I'm saying is, get what you can afford. Get what works works for your family and what fits into your budget. So let's just say that all you can afford is a $5,000 policy, and let's just say you were to pass away and a burial cost $10,000. Just throwing a number out there. Well, you shouldn't allow anyone to make you feel bad about the fact that all you may be able to afford is a $5,000 policy, because if you pass away and you have a $5,000 policy, it's easier for your family to be able to come up with $5,000 to make up the difference than for them to have to come up with the whole $10,000. So I'm just being realistic here, something. I'm not. I don't subscribe to something is better than nothing in all areas of life. Some things I think that shouldn't apply to, but when it comes to finances, having some money is better than having no money. So let's just say your family does have savings, right? Let's just say, you have $10,000 in savings, right? I'm just trying to cover a couple different scenarios here. Let's just say, you have $10,000 in saving. You and your spouse saved up $10,000. You have $10,000 in savings, and one of you passes away, and whatever coverage you had, it was only equal to $5,000, right? Wouldn't you feel better knowing that your spouse only had, and no, we don't want our spouse or our children or whoever to have to clear out half of their savings to bury us. But if all you could afford is $5,000 in coverage and you had $10,000 in savings, wouldn't you feel better knowing that even if your spouse had to take $5,000 out of your savings account, they still have $5,000 remaining because you thought ahead and made sure that they would have $5,000 in cover towards your burial? Wouldn't you feel better knowing that, they only had to clear out half of the savings instead of clearing out the entire savings to bury me? So do what you can with what you have right now. There's always the option to purchase more coverage later if you're in a situation where you can afford more, but don't allow anyone to say to you, and again, and this is probably some agents will probably watch this video and they may feel like as an agent, it's my job to tell you, yes, you should have this specific amount of coverage because, like I said, technically being underinsured is a thing. But I say it has to work for your situation. I'm not the agent that's going to push having a certain amount of coverage because, again, the goal is not just to have coverage, but it's also to be able to keep your coverage. Because if you're in a policy that you really can't afford and you're struggling to pay the bills that you already have, let's be realistic here. A lot of times when the money just isn't stretching the way it should, when we're thinking about what we should cut or how we can save some money, a lot of times life insurance is what people let go first. And it's just realistic. So don't allow anyone to beat you down saying that you should have a certain amount of coverage. Do what you can, what works for you, and know that everyone's situation is different. And when I was maybe a year and a half ago, I never forget, I was watching a training video in the back office of one of the companies that I was with at the time, with the company that I was with at the time. And on this training video, I heard a guy refer to life insurance as being the last love letter that you'll leave to your family. Because, it's like an act of love. You love them enough to not want them to have to struggle or try to figure out how they're going to bury you, or have to figure out how they're going to come up with all the money that's needed to bury you, right? So let's just look at this in the term of life insurance being the last love letter, right? So with love letters, some are long, some are short. Aaliyah talked about a 3-page letter and enclosing it with a kiss, right? Well, not all love letters are going to be 3 pages long. Some may be a few sentences long. So the same way a love letter that you would leave to your spouse, it would be different. The love letter that I would write to my spouse would be different from the love letter that you would write to yours. But it doesn't mean that the feeling behind it is any less. So I may have a policy that's a certain amount, and it may not be the amount of coverage that you can afford, but the thought behind it is the same. You're saying that I love you enough to make sure that you don't have to struggle to figure out how you're going to bury me. And if all you can afford is $10,000 or $5,000, I can guarantee you that it will make a difference. It may not be able to cover all of the expenses that they'll have after your passing, but that's $5,000 that they won't have to worry about coming up with in the event of your passing. And I just wanted to address that, because this young lady, and this was a situation that happened. This happened a few months ago, but I got her permission to share that with this video because someone specifically asked me about being underinsured. And you have to start somewhere. That the saying is, you have to crawl before you walk. So don't let anyone verbally bully you into feeling bad if you can't afford a certain amount of coverage. So I guess I've expressed what I wanted to express here today. And if you want to discuss more about being underinsured, or if you want to discuss the amount of money, because there's a table that we use as agents to figure out how much coverage you technically should have. And if you want me to work up those numbers for you, just message me outside of the video and I can tell you what the amount of coverage is that you should have. But just do what you can with what you have until you can do more. And you may not even want to do more. If all you want to do is make sure your family doesn't have to struggle to figure out how to bury you, that's perfectly fine. Everyone purchases life insurance for different reasons, and whatever your reasons is, those are your reasons, and they're going to be different than everyone else's reasons, and that's perfectly fine. So we're already at 20 minutes. I'm going to move on to the weird fact about me. And so this weird fact is going to be a little different because I need you all to help me determine if this is actually weird or not. Right? So I'm kind of like taking a poll. So my little brother, he was bragging about how he's the only one of us, out of all of the siblings, whose name is similar. Well, he's kind of named after our dad, and he was saying how he's the only one whose name is similar to our father's. And I told him that I feel like my middle name has a part of my father's middle name in it, and he thought it was the most hilarious thing. He's trying to tell me that I'm tripping, that my middle name is nothing like our father's middle name. And so I want you guys to help us settle this and let me know which one of us is tripping here, right? So my father's middle name is Anthony. I'm stressing the "and" part. We all can agree that we hear "and" in the name Anthony, right? So my middle name is Danielle. So can we agree that we can hear the "and" in Danielle? So with that being said, and the fact that we all can hear the "and" in Danielle, I need you to tell me, am I tripping? And is it weird that I feel like my middle name kind of has a part of my father's middle name in it? So whatever y'all say, if y'all say I'm tripping, if y'all say that Danielle does not have a part of Anthony in it, I'm going to just roll with that. I'm going to go with it, and I'm going to tell my little brother that he won this one. But see, this is why little brothers be on people's nerves now, because even if Danielle does not have part of Anthony, and I felt like he could have let me have that. He could have just let me think that it did. But I want y'all to help us settle this today and let me know if I'm tripping or not, and if this really is weird. So I'm going to move on to the song. So the song that's playing, and don't judge me for the songs that I know, okay? Or do, whatever. So the song that's playing today is a song by Luke and 2 Live Crew. I think it's called the Sorority Rap or something. So that may not, I don't know the exact title, but you can look it up. Or maybe, especially if you're a member of the sorority or fraternity, you might not want to look this up because it's not a very sorority or fraternity friendly song. But and I can tell you why this one is stuck in my head today. So one of the rappers, I think it was Boosie or somebody, had on a shirt, a fraternity shirt, and the fraternity was kind of up in arms about it. And when I was reading about it, I said, oh, they must never heard this song by Luke, because they would have like hung him out to dry, because like I said, it's not a very fraternity and sorority friendly song. So ever since I was reading that, and that song came to mind, it's been stuck in my head. So y'all can look it up if y'all want to, because I can't remember the exact name. So I'm gonna end this, but again, some coverage is better than no coverage, and life insurance is the last love letter you'll leave to your family, and everyone's love letter won't be as long or as big as everyone else's, but it doesn't mean that the love isn't the same. So until next time, that's just something I wanted you to think about, and I'll be back with another topic soon. Bye.